obviously, the first part of any financial plan is taking a look at your cash flow and budgeting. But once you've got, and we'll talk about that at some point, but there's two major ways that are available to us. And the one is through RSP, so the home buyers plan. And the other is tax-free savings plan, which is a relatively newcomer to the scene. They've been around since 2009 now, I believe. And so if you're taking a look first at, 2009, if you take a look at the home buyers plan, the rules of that are you cannot have owned a home in the last 4 years. You must sign an agreement to buy your home and intend to live in the property within a year. If you've used the plan in the past and you have an outstanding balance, that has to be paid off before January 1st of the year that you buy your home. Mm-hmm. And you have to make the withdrawal within 30 days of taking title of the home. And a really careful one to point out, because I've seen two cases in my journals where people have been caught off guard with this. The money has to be in your RSP account for a minimum of 90 days before you make the withdrawal.
Yeah, that's a huge one.
Important.
Mm-hmm,
and the amount that's available is $25,000 per individual, and per couple, $50,000, so $25,000 each. And then if only one person in the couple qualifies, you can still do $25,000 for that one person.
Right.
So that's the home buyer's plan. And that basically, consider that to be a loan that you are making to yourself. Mm-hmm. You're going to be paying this off over a period of 15 years, and you are going to start your payments in the second year after you take possession of your home. So if you purchased your home in 2013, your first payment would have been 2015. Now, it's basically a loan to yourself. If you do not repay 1/15 of that loan that you made to yourself from your RSP,
right,
then you will end up having that amount added on to your income for that year and taxed on it as income.
Wow.
Yeah. So, you want to make sure that you use on your tax return Schedule 7 to ensure that you are assigning a portion of that year's RSP repayment to your home buyer's plan. So just remember, Schedule 7, when you're doing your taxes, any contributions that you make in that year, part of it will go towards repaying the loan that you made to yourself to purchase your home, and you do that using the Schedule 7.
Got it. And then what about the TFSA then?
Yeah, the tax-free savings accounts are really flexible. So the nice thing about a tax-free savings account is when you take money out, you don't lose your contribution room. So in 2009, 10, 11, and 12, the contribution limit was $5,000 per year. And in 2013 and 14, it was $5,500 per year. We briefly had an optimistic government that bumped it up to $10,000 in 2015.
Wow.
And that was promptly taken away in 2016, and it's back down to $5,500 per year. So if you add all that up, currently, any 18-year-old or older opening up a tax-free savings account can put in $46,500 right now.
Amazing.
If you take money out, you can put it back in.
Right.
So you want to be careful not to over-contribute. You're penalized on any over-contributions. Personally, I haven't seen it yet. I've heard of people who have over-contributed, and I haven't yet heard of the government penalties coming down. But certainly, when you sign up for a tax-free savings account, you are signing up with your social insurance number and valid ID. So the government really can track those contributions. So you want to make sure you don't over-contribute.
Right.
The nice thing about tax-free savings account is you can draw down on it for your down payment, for your closing costs, for any unexpected costs that you're going to incur, especially in the early years of home ownership. And like I said, there's $46,500 of contribution room available to each and every Canadian resident over the age of 18 years right now.
That's amazing. That sounds awesome. So in general, I guess, I mean, how can a financial planner, someone like yourself, help people budget their money more effectively?
Yeah, budgeting it's very emotional, especially when I sit down with clients. It can often result in an argument. So what I tend to do when I get a new referral is I email out a budget template, and we set the meeting for a period of time in the future to give people, enough time to sit with looking at their budgeting. And because when I sit down with somebody, I want to kind of have their thought process starting to roll.
Yep.
So budgeting first and foremost involves setting goals. What are your short-term goals? What are your long-term goals? Some short-term goals might be, paying down credit card debt.
Yeah.
Maybe you want to buy a new car next year, or your roof needs replacing. Mm-hmm. Those are some really valid short-term goals. Long-term goals might be retirement at the age of 65 with X amount of dollars, per year. Mm-hmm. Or a long-term goal for somebody in their early 20s might be buying a home, in 10 years.
Right.
So looking at short and long-term goals and identifying your income and your expenses. So what comes in minus what goes out, because that's kind of the basis for what available cash do you have.
Right.
And then separating your needs from your wants. Like, is that purse a need or a want? Yeah. So separating your needs from your wants. And that is the sticky bone of contention. Is it maybe necessary to have, the $120 cable package, or the $50 per month water delivery?
Right.
Is that a need? Is that a want? Is it necessary for the kids to go to private school?
Yeah.
Is that a need or is that a want? Sometimes, I'll counsel people to say, listen, you're spending $50,000 a year on private school for your kids. Why don't you take that $50,000 a year and buy a house in a nicer school district?
Right. It's a good point,
that
for
cash
sure.
flow can certainly afford to pay, the difference. Go and move to Leaside. So there's a lot of needs versus wants conversations that have to happen.
Right.
And when I'm sitting with a single person, that tends to be a lot easier. When I'm sitting with a couple, that tends to generate a ton of, let's call it, discussion.
And so if you're sitting with a single person and you're having those kinds of conversations about, needs versus wants, is it difficult to sway them to what you perceive as what you think that they should need or want versus what they think they should need or want?
Yeah, I think a lot of it is compared to income. So we do a pie chart so when somebody sits down, we do a cash flow statement. We do a pie chart from that cash flow statement that shows people what percentage of their spending is going towards transportation, towards housing, towards, discretionary, towards, health and wellness. We take a look at all the various categories of their spending, and hopefully that chart can show people themselves, because most people have enough insight to know, that maybe, if you're making $40,000 a year, a $500 a month closing budget, isn't really leaving a lot of room for shelter, for transportation, for groceries. So, I think people have enough insight that they can kind of see it. And then it's a choice, right? People make their own choices. I can't impose anything on a client, but people are free to make their own choices. And from there, they can actually design their budget. And, designing a budget, if you're not going to use it, it's a completely useless task. So, keeping track of your expenses for 1 month. So every single penny you spend, get an envelope, put it in your purse or in your wallet, and every single time you spend even a penny, either write it down or get a receipt, and it goes in that envelope. And then you can really find out. Because a lot of people have a bit of myopia when it comes to what they're actually spending on things. We've all heard of the latte effect, people getting, instead of being nickeled and dimed, people are getting, latte'd and muffined, to death these days. that $10 a day that you spend, on a muffin and a couple of coffees really adds up, especially when you think about, the opportunity cost of spending that money on a muffin and a coffee could have been, an 8% return in their tax-free savings account or their RSP, helping them save towards home ownership. So designing the budget and then putting it into action, and it's got to be something that's active and reevaluated on a regular basis. And also, people have seasonal expenses. At Christmas, and we're here right now. At Christmas, taking a look at a pile of things that that I still have left to buy. For my list, and I definitely go a little over budget at Christmas time. And that's a huge expense for a lot of people. And also, maybe some people incur extra costs in the winter because of vacation. So you have to include those seasonal costs in your budget. Maybe all of your sports are summer sports, like sailing and golfing. So creating a year-round budget sometimes doesn't work. You have to tailor it to be a bit more of a seasonal thing.
Right. Wow.
So there you have it.
That's definitely a lot to think about. I can't say that I'm perfect when it comes to budgeting myself. Sometimes I probably don't know where all of my money goes either. And it's funny, I just sat down this weekend. I thought, okay, I got to tackle this. I got to figure this all out. And so it's funny. And every year I look at that and go, oh yeah, I should really know how much money I'm spending. And every year,
I'll send you over a template.
Okay, sounds good. That would actually be very helpful. And then maybe if you ask me a week from now if I filled it out, that's probably, I won't be offended if you bug me about that because
there you go.
It is.
I've did up an Excel spreadsheet. It's excellent. It includes charts and graphs and all kinds of nice little bells and whistles.
Awesome, that's great. So, Connie, where can our listeners reach out to you if they have any questions? How can they find you?
Yeah, you can give me a call at 416-992-7229 or by email, connie@portfolioclinic.ca or online at portfolioclinic.ca.
Awesome. That sounds great. And maybe our listeners might want a copy of that Excel spreadsheet as well, too, so that you can whip us all into shape.
Sounds good, Deval. Thanks so much.
Awesome. Thanks for joining us today, Connie.
Thanks so much. You have a great day.
Thanks, you too. Bye. Thanks so much for listening to the Morrison Report podcast. If you'd like to follow me, I can be followed on Twitter at davellemorrison, on Instagram at davellemorrison, on Facebook, I've got a business page, that's Davelle Morrison, Bosley Real Estate, and I can be reached at Davelle, Davelle, at bosleyrealestate.com. Thank you so much for listening. If you've got any suggestions of concepts for future shows, please shoot me an email and let me know. Thanks again for listening.
You've been listening to the Morrison Report. Hosted by Davelle Morrison, sales representative for Bosley Real Estate Limited Brokerage, real estate investor and best-selling author, bringing you insights on the Toronto real estate market. Join us for another podcast.